We are going to go straight to the fireside chat with John Ryan, the President and CEO of CSBS.
Hey, John, good to see you. Excited, to get to have this chat. I always enjoy when I get to pick your brain. I don't want to say I play favorites among the regulators, given that that whole crew is still on the phone, but I always find it enlightening. I really love the topics we're going to cover. And I'd like to start. We've seen a quickening pace of change, and it's not just because COVID, right? Like that was actually just a bit of a spark to a much broader set of industry trends. We've seen the maturation of fintech, the entrance of traditional tech into banking applications, and major shifts from some of the largest banks and players in the traditional space itself. How do you view the changing ecosystem? And, from your regulatory stance, what do you think banks need to be considering?
So, Jason, I wouldn't be a good partner if I didn't start out first by thanking Jalapa Jagtiani, President Harker, the Philly Fed, for creating this event, because it really is unique. And I think, and we'll get to this a little bit later, there's some signals that we're sending, and I like not to be too subtle, to the industry, our fintech participants. So that's probably a good segue into actually answering your question, Jason. You're right. A transformation of the financial services industry. I mean, it's been living through transformation forever, and technology has been a part of that transformation for a long, long time. I'm going to tell the story of what we've been experiencing as a group of state regulators that I think speaks to this moment. So about a year and a half ago, one of our commissioners, thinking about strategic planning, and I'm very aware of some of your thoughts on this, and agree on the value of strategy and strategic planning. So our members wanted to really get a little more strategic in our strategic planning. We had a retreat. We brought in a futurist to help us put ourselves in the right mindset. And what she did was she started off just asking a basic question, because there was a lot of fear about, and we were focused on technology, a technology transformation of financial services, so those that we regulate, as well as how we would be regulating them. And she asked everybody to start off by saying, what did technology in the workplace as a bank regulator look like when you entered banking? And that went from 10 to 40 plus years. And what everyone realized was it looked a lot different, and it's a lot better now. And that was a great place to start. Instead of being fear-based, like what's coming, radical transformation, dislocations, is the possibility that it's better. And I liked what Sultan said, is build on the success of the 20th century. I think build on what technology has done to really advance access to our financial system, the functioning of our financial system, and how do we make it better? So that's the mindset that we came into this, and we had to really accelerate our own plans as financial regulators. Margaret alluded to this, but increasingly we're providing a technology backbone for state regulators. Everything went off-site. What we thought would be a 5-6 year transformation became a 3-month transformation or a 3-week transformation that we had to do. And it worked much better than we expected. So those are a few things I'd like you thinking about. One, the future isn't that scary. It doesn't look that different 2 to 3 years, but it looks pretty different in 10 years. You look back 10, 20, 30, 40 years. And another thing that I'd like to share with you from a state perspective is we've been regulating, and you talked about the changing ecosystem, Jason. We've been regulating an ecosystem and not necessarily knowing it was an ecosystem. Almost every state regulator has bank and non-bank under its regulatory purview. That's been an evolving ecosystem that we've regulated as pieces. And we're starting to think of that more as an ecosystem. And just one example, we see the coming together of bank and non-bank through partnerships, third-party service providers, lots of different ways. There's such a reliance within that ecosystem on a lot of providers. We need to look at it that way. And cybersecurity is a really important point there. So, a few things. One, this evolution has been underway for a long time. It just got kicked into higher gear. We can adapt much quicker than we thought. Some of what seems scary is actually really exciting when you think about it. And this is an ecosystem, and we need to regulate it more like an ecosystem. And I think that's some of what bankers are asking for. You know, yes, you're responsible for your vendor, but how can you help us? And I think that's the last thing I'll leave you with is we still see the value of more than still. President Harker kicked this off. The value of, and I'm going to throw out a controversial word here, Jason, based on your last remarks, the value of geography. That proximity affects behavior, and it's delivering a lot of value, whether it's the PPP program or other forms of lending. And we're interested in making sure that a system of locally based institutions can still function in a global financial system as long as they're continuing to provide the value that we see. So yeah, that was a whole lot, Jason, but
no, but those are, good and important things. It's not to say geography isn't important. In fact, locality can be. We've just, and I think you hit the nail on the head here, is COVID proved a lot of things that we held as, sacred, that, oh, we can never. Well, COVID proved we not only, can we, but we must, right? Like is this a multi-year change, or we actually proved we can move fast? And I think that brings us to this idea of, now that we've broken through the scar tissue and like new muscles are working in terms of the adaptation and change, that brings us to the 5-year strategic plan, which often emphasizes plan over strategy. And the 5-year horizon itself is problematic, right? I don't know what any bank's 5-year strategic plan says, but I am willing to bet, all of the Bitcoin that I own, no one said 5-year strategic plan, 2020, global pandemic, I'm going remote and I'm going to do twice as many loans in the first quarter than I, planned on doing all year, right? So what do banks need to be thinking about related to the strategic plan, and how should they be engaging their regulators, right? Because it's often the regulator who's asking the question of, show me the 5-year strategic plan.
So a couple of different things. One, regulators shouldn't be telling their banks how to think about their strategy, but to your point, strategy matters. And it matters to us in terms of the viability of the business, the future, safety and soundness. It matters to us as state regulators. We want to see healthy, sustainable economic growth, access to credit for consumers. So your strategy matters to us. You heard from the last panel, talk to your regulator. And given the transformation that's happening right now, I do believe you'll see an increased emphasis on conversations around your strategy, your digital strategy, what you're thinking, and probably help from, regulators in that conversation. We're in early days on that, but you need to be thinking about it. The world is changing. It isn't the same business model, isn't going to work for everybody, shouldn't work for everybody. That's the value of the diversity of our financial system. But as you heard from the last panel, pick up, and this isn't just strategy, this is engagement. It should start with strategy and a conversation about strategy with your regulator, but engagement with partners, third parties, others. Talk to your regulator. It's been true forever that, no surprises. So I would say start a conversation and know that your regulators are still learning and understanding. And that's one of the values. That was what I was trying to get out when we started this conversation, coming together as new service providers, evolving service providers, partners, et cetera, bankers, community bankers, and regulators, and acknowledging there's a lot of learning, but we see the value that these three forces coming together can provide for the health of the U.S. economy and the viability of the U.S. economy going forward. So engage.
One thing you just said that really resonates to me that I want to accentuate is this idea of no surprises. And I would say, dealing with lots of banks around change and innovation, oftentimes that no surprises, the approach is don't do something new that could cause a surprise. But what you're emphasizing, I think, is important, that especially the leadership that is, present at this conference takes back is it isn't about don't do something new that may cause a surprise. It's have open, transparent conversations, which leads to this idea that, I love, you calling out, even the examiners and the regulators themselves are in the learning process, that no surprises really comes from more conversation, not minimizing what we do that's new.
Absolutely. I mean, if everything that's happening right now, if you aren't trying new and different things, then you should go back to the office and start having some conversations.
If your office is open.
Yeah, so here you see my office. Here's an example of how we adapted quickly. I've been in the office all of, I think, 3 times in a year, and I can't believe how well we're functioning. So yes, you should be thinking about what the world, talk with your staff about what they all think the world's going to look like in 10 years, what technologies, and where do you fit in to that future, and how do you get there? And a couple of you, this has been a theme in terms of trying different things. Jason, you made the point, small things, but try things. Not everything's going to succeed. That's okay. And this is the signal I think I'm trying to send is if regulators are risk averse, but just think about this event. We're gathering fintech companies, we're doing all our disclosures, there's no endorsements here, but we could easily be criticized for this event and highlighting some over others. So again, no endorsements. But we are leaning into risk because we think it's so important, the innovations, the changes that are happening out there, that we get together and talk about this and share with the community bank industry. So I think that's a signal that regulators are expecting that banks are going to be trying new and different things and not always succeeding. But look for your thought process, the sharing, the communication. But the complete risk aversion is really risky.
Spot on. Actually, the chair of one of the banks in Alloy Labs made that comment when we were talking about this. The short-term avoidance of all risk is actually building this compounding risk that's going to be catastrophic because we're not taking the small changes we need to today. And so he likened it to the earthquake, right? We'd rather have a series of small shocks because we did something that didn't work, but it got us to the place we needed to be rather than the world has changed and we have not. But that brings us to change often feels dangerous because of the uncertainty. And there are generations of risk and compliance people that do everything they can do, and they've kind of forgotten we're not managing risk, they try and eliminate risk. What is the state regulatory view on whether we have the right balance between the need to innovate and the need to manage or eliminate risk?
So it is harder to innovate in a regulated environment. It's not impossible to regulate. And many of you are purchasing innovation in some of these partnerships that is harder to do in your own institution. Some of it is it's just not worth the investment, or you don't have the resources, you're benefiting from kind of a shared investment. But it's challenging. But it is not, again, that is not a reason not to do it. And as regulators, my members, and I know our federal counterparts, we realize there's a constant balancing and we may need to calibrate. We're always calibrating to to some degree. And this is a moment where we need to look carefully at the risk, the reward. And if too little innovation is happening inside the banking system, it gets driven outside the banking system and will have consequences, the same that we're trying to avoid in our risk management as regulators and in banks and their own risk management, sometimes managing to the risk of the regulator. We're creating other problems. So we should confront that openly and honestly in our conversation. So we probably don't have it right, is the short answer.
I like that concept of calibration. I want to build on that for a second because I think it's an important one, because it speaks to that idea of the answers lie outside of, the boardroom that I was speaking about. And I think, banks also need to rethink who they calibrate against, right? The competition isn't the bank brand that is across the street from you when you're calibrating your risk. From a holistic view, what do you, both you as a regulator and you as a person, how do you think about like this ecosystem? Is it as clear as it used to be around banks by asset size, by geography, by kind of products they provide? How should the bank be looking external, from with your regulatory stance, right? Because you don't regulate, a lot of these other entities, but they impact your regulatory stance, right?
So, and I myself am not a regulator. I represent regulators. So in some cases, our members regulate both. So look at some of the largest, the non-bank mortgage industry. There's been, for a variety of reasons, a movement from mortgage origination, lending, and servicing out of the bank sector and into the non-bank sector. And we're regulating in both places. And now we're going through a process of looking at that non-bank servicing, and do we need to apply bank-like, and we have proposals out to do this, something that looks more like bank supervision, prudential standards for servicers. So it is an ecosystem. And if we have to look at our actions in one place and the impact in others, at least as states, because we're regulating and starting to think of it as a whole ecosystem. And as banks, for the banks in the audience, I think that it's critical that you understand who your competitors are. I remember being at a conference and hearing a consultant say, you used to know exactly why a customer left, like you know the interaction that led to their leaving. And in an online world, you don't always understand the interaction that led to them leaving or where they were going to. I think it's critical that the banks understand who their competitors are and where customers are going and why.
Well, and they might not even realize they're leaving because you're not losing the customer, you're losing a part of a customer. I opened another account to do this, or I ended up going to Rocket Mortgage for that, or I'm now I got my kids an account with someone not an endorsement, Greenlight, right? Or I have a Chime account, on the side for these other things. So I'm losing part of a customer, which brings us back to another important part is doing new things often requires new functionality, right? There's a reason people are picking some of these other point providers that are, meeting a need. And so since many banks get the majority of their functionality from the core providers, which are traditionally slow to release new features and functionality, what is the state regulator's perspective on dependence on the core provider as a source of innovation?
So I'm going to step back a couple of levels to what do we care about and why? So state regulators, as long as state regulators have been around, have been focused on the health of their state economies. And so we're focused on the health of the economy, the aggregate health of small business in our states, access to credit opportunity, and the health of aggregate, the consumer and individual consumer protection. The proximity of this diversity of institutions has made a difference to all of those categories from where we sit. And the loss of that diversity, we believe that proximity still matters in many ways, not in every way, but in many ways. PPP program was an example. Maybe an algorithm will replace all of this knowledge, these interactions, and do it better. That's not where we are. It's not where we're going to be, I don't think, in 10 years. And we need this diversity of institutions. So if we need this diversity of institutions, innovation is critical to not just surviving, but thriving going forward. We need a competitive marketplace of service providers that will help them get there. So I think we have to look at what's happening in terms of consolidation, the responsiveness of service providers to this need for innovation. And that's where we are right now, is a deeper inquiry, understanding that these service providers are critical to the functioning, and that's a cyber issue, that's many things, but it's also an innovation issue. And we're curious and we're exploring that, and we are big believers in competition. And so I think that's where we sit on that. We've surveyed, and thanks to any in the audience who filled out the survey, it is the largest survey of community banks. Leading up to our community bank survey, our community bank research conference, we've surveyed banks, and we asked some questions on core service providers. And there definitely is a lot of angst and dissatisfaction in the community bank space. It's not absolute or complete, but it's remarkable.
Yeah. So last question as we come up on time. What do you see as the risk of not beginning to revisit strategy, products, relationships, and even the technologies?
It's got to be the risk of the future of your financial institution for the longer haul, your franchise value. That I still really believe that your proximity to your customer, and to your point, it's not necessarily the dog treat. It's really a deeper relationship and an understanding of your customer, and a responsiveness to your customer is going to be the community bank's strategic advantage. But how you're delivering on that, as a consumer myself, needs to evolve to attract new customers and retain existing customers. So it's critical.
Well, I really, for one, appreciate the transparency of the conversation, being able to challenge some of the norms. And, it is great, both in the panel of the regulators before this, you as kind of the summation of a multitude of the state bank supervisors and really having the pulse on what they want, to hear that they too recognize the world is changing and are encouraging and are partners in the regulated, institutions and how we evolve to better serve them. So I know we are kind of the last thing before the end of the conference. It's been a long day for folks, and I guess it's the virtual happy hour that follows this afterwards. But thanks, John, for taking the time and, for sharing it with that level of transparency.